we guested Mr. André Casterman from Belgium here today with us. And it was a great speech on trade finance distribution initiative. It proved to be really interesting and insightful. So today, we're not only focused on TFDI initiative, we're going to expand, we're going to display, to present Trial token launched on XTC networks recently. It was presented last week in Porto during the ITFA meeting, and it was a good one. So not to lose too much time, I would love to reintroduce Mr. Casterman. Pleased to have you here today with us, by the way, and Christoph Gugelman of TradeTech from UK, from London, UK. So I leave the stage to you directly, Mr. Casterman, to restart from where we stopped on July 7th and to go on with our discussion on trade finance distribution initiative.
Thank you,
Thanks
Andrea.
for joining me, by the way.
Welcome. Thanks. Great to be here, and I recognize some friends in the participants. We'll indeed focus today on the technology enabled through the Trade Finance Distribution Initiative, and this is why we have the pleasure and honor to welcome Christoph Gugelman, founder and CEO of TradeTech. We covered indeed the trade finance digitization on the session with Andrea and Eric of 7 July. And I will just cover a few points from there, from that one, in case you were not able to attend. And just positioning Trade Finance Distribution Initiative for those of you certainly who are not involved in the trade finance space. The goal is definitely, as you will see throughout my introduction and Christoph's presentation, as the goal is to attract new investors to the trade finance asset class. But I understand if you're not in investment banking, if you're not in banking, that might sound a bit hard to grasp in one go. So at the top end of the market trends, I would regroup everything we see in trade finance with regards to technology innovations around 4 themes: new client expectations, everything that has to be digital, accessible, easy to use, attractive to use in terms of GUI, for instance, interoperable. So everything digital is definitely a major trend. And of course, clients have a lot of expectations that were reinforced with the pandemic. Another major driver for innovations around the use of data is the whole climate change and ESG theme. And we'll come back on that. And 2 other major themes are around the institutional investors that are discovering trade as an investable asset class, thanks to technology enabled through TradeTech and the whole tokenization or digital asset space. So basically, for those of you who want to discover more about those major trends, I have here basically a set of proof points and examples of why I believe those are 4 categories, and I'm always open to debate and to evolution of those proposed themes, but that has been my conclusion over at this stage, at least. So moving on, basically those transformations in the market are enabled by new technologies, and the types of new technologies are in the 4 circles here. It's all around the use of data, not just for analytics and big data, but really making sure the data is authenticated, can be trusted, can be used and is correlated with other data in order to get the right insights. Artificial intelligence, certainly in the area of credit management, compliance, workflow digitization platforms that supports structured transactions to be processed between corporates and banks, between banks and their counterparties like institutional investors, as well as distributed ledger technology. So whatever technology we discover in the market, usually you can associate it with one of those 4 themes. Again, this is a purpose to try to structure the debate. And then, of course, a lot of technologies are enabled, like electronic signature, the use of cloud, the use of electronic originals, distributed ledger technology, digital assets, tokens. But those technologies, in order to be really applicable in the market and enforceable from a legal perspective need to be integrated into law, which is why a lot of non-commercial bodies like the Law Commission for England and Wales, as well as the World Economic Forum or the United Nations, G7, and others, Abu Dhabi Global Market, are changing national laws, or at least promoting at global level the need for change of laws in order to recognize that it is legally acceptable and enforceable to move paper information to digital information. Within the International Trade and Forfeiting Association, we have structured the work around digital innovations around two strategic initiatives, one in the corporate to bank space for negotiable instruments, and the one we will focus on today, the trade finance distribution initiative, which is indeed focusing on the bank to investor space or originator to investor space, with the making or bringing the trade asset class to those investors who want to tap, who want to bring liquidity to those originators through indeed various mechanisms that we will discover today. The goal is definitely to, and that's what we have been doing over the last 4 years, is to establish a business community. The goal is definitely to bring the players together, because the business is done at this stage, at least, on a bilateral basis. And the work, of course, has to be achieved by building this community, demonstrating how technology enables distribution to be done more digitally, more cost effectively, and also sometimes enabling new options, as we will discover from Christoph with the Trada token. This is really about making sure that all of the distribution mechanisms are covered by the TFD initiative and the supporting technology. And ITFA has indeed worked over the years together with other associations on market practices. But of course, to digitize, you need technology, and to develop technology, you need ventures. And this is where TradeTech has been selected by ITFA as the core platform for distribution, supporting syndication, credit insurance, notes and tokens issuance, various options for trade originators to engage with banks, credit insurers, asset managers, institutional investors, as well as other types of liquidity providers, could be corporate treasurers as well, and retail investors, as we will discover. So definitely the goal is to work with those new trade finance funds, as we can call them, which are indeed new liquidity providers in the distribution space, players that usually favor working with banks that are servicing the clients, the SMEs, the corporates, and originating various trade transactions, but the funding happens on a joint basis by the originator and the trade fund. Examples are here on the slide: Santander Asset Management, NNIP, Allianz Global Investors, and those are liquidity providers that are acting as indeed asset managers and bringing liquidity from their own clients, could be pension funds, corporate treasurers, other types of liquidity providers, and making sure they can access the originators and using indeed the TradeTech platform. For them, this trade finance has become really an attractive asset class, as you see from Allianz Global Investors here, and there are various reasons for this. But the main one I would highlight is the fact that trade finance is supporting the real economy. These are not exotic instruments. These are transactions between corporates, could be large corporates, could be SMEs. The wide spectrum of clients, of bank clients, is covered in trade finance, and this is why it is quite attractive to investors, because the real economy never sleeps. With this, for more information, do access the Trade Finance Distribution website, where you have a series of podcasts. We have developed white papers, and the list of members. And if you're representing a financial institution active in trade finance or wishing to get into trade finance from a liquidity perspective, do reach out because we are indeed open, keeping this community open for additional members. So with this, I'd like now to get into the details of the TradeTech proposition. TradeTech is indeed the core platform for the trade finance distribution initiative. But as we will hear from Christoph, there is more to it when it comes to technology partnerships. And I suggest at this stage to invite Christoph to share more details on the TradeTech platform.
Thank you so much, Andre. Let me just get this into presentation mode. Yeah, what I would love to do is to give you a little bit of a flavor of how TradeTech operates and how the trader token really works end to end, and what the benefits are of investing into a real economy token. So TradeTech is a primary issuance platform only, so we're not doing any secondary issuance. We originally have come from a world of more the kind of traditional world where we are repackaging trade finance into notes. But obviously the repackaging into tokens requires the same underlying technology, and we will see in a second why kind of like the process flow is very similar, and it's just really moving now the platform into an agnostic platform, which can deal both in the on-chain and also in the off-chain world. The technology has been built really to unlock illiquid credit, and trade finance is the anchor in there. Trade finance is, as such, a very operationally intense asset class. It's an asset class that requires huge costs if you want to distribute in a manual basis. And therefore, historically, banks have become the sole intermediary of trade finance and couldn't really find any other investors, neither institutional investors nor really retail investors, to give them access to trade finance, because the cost of accessing that asset is huge if you don't automate it. And that is what TradeTech does. So it repackages, but it also automates the process flows. And just to illustrate, if you take a portfolio of 100,000 revolving invoices, each of them has a tenor of a few days to maybe 90 days. And if you want to do this on an Excel spreadsheet, you will very quickly go crazy. Also appreciating that it's completely acceptable that some of the trades do not pay exactly at the date, at the maturity date. There is flexibility, which is accepted, and many customers actually pay early, and many pay a little bit late. And there are obviously mechanisms for this in place, but it's very hard to keep control over such a process if you want to do this in a traditional form. So it needed to be automated, and that's what TradeTech really provides. Just one word on why is it actually so interesting to have access to illiquid credit in particular to trade finance. If you look at the rates or the kind of the compensation for risk you can get as an investor, whether you are a retail investor or institutional investor, doesn't really matter. It's always the same principle. If you want to invest fairly low risk, then you would go into government bonds, because here governments generally can print money, and therefore they're more likely to pay back. So that's essentially the risk-free rate. That's the basis. If you want to assume on top of that a credit premium, you would go and invest into a corporate bond. Here, for the large corporates, you would find quite liquid markets, and the credit premium might be quite small, and obviously also depending on the riskiness of or the risk assessment or perception in the market of this corporate, the premium will be larger or smaller. But what's kind of almost gives you a little bit of something extra for, wouldn't say it's not for free, but without actually really taking more credit risk, is if you move into assets which have a so-called illiquidity premium. And why that doesn't necessarily need to be associated with more credit risk is because you are sharing here into an asset that is not easily disposable, so you can't really necessarily go tomorrow and sell it in a secondary market. But for trade finance, that doesn't really matter so much, because trade finance per se is a very short, or most of the assets are quite short term. They're self-liquidating, so you might not necessarily require the ability to sell the asset after 17 days and find a liquid market. You might be able to, and might be acceptable to you, to wait for 90 days or a year or whatever tenor you feel comfortable with. And for this, you can get an illiquidity premium. Trade finance, you also get a premium which shares into the commercial benefit of the underlying risk, because a corporate that is able to make a margin on the turnover of goods they sell and purchase and on sell, obviously, if they have more liquidity, they can do more of that volume, and they can make 20%, kind of a margin or whatever it is, and they are less sensitive to the credit financing costs, which obviously lets investors share into this additional benefit. So there's a lot of value for investors, and it's a really, really great thing. And that's why investors are so keen to get access to this illiquidity premium, but they couldn't really in the trade finance space because of everything we mentioned before. So in short, illiquid credit, in particular trade finance, they are not easy transferable, and they do require a transformation into a tradable instrument. And the token, and that's really what we want to speak about today, is a fantastic way to do this. And in fact, it's much better than doing notes. And we'll go through why that's the case. So looking at the process of what TradeTech does is it plugs into banks and non-bank originators of assets, of trade finance assets. And then what it does, it converts those into either a note or a security token. We want to stress these are regulated tokens we are producing. So these are not kind of utility tokens or the likes. They are subject to a prospectus. They have a regulated issuer. A key information document for investors need to be produced. A white paper needs to be produced. So it's a whole package, and therefore there's also certain minimum quality standards that obviously are guaranteed with these tokens. So that's an important aspect, and it's therefore very different to the utility tokens that obviously serve a very different purpose. So that's the repackaging. And then if you move up on these four cards or points here on the slide in the middle, then the processing. So the workflow automation, what does that really require? Well, as I said before, you need to be able to extract maybe 100,000 of invoices, and those invoices will then need to be routed. They need to be checked against eligibility. So do they have the right currency? Do they have the right tenor? Do they come from the right obligors? And so on. They need also to be checked against portfolio guidelines. Maybe investors prefer not to have a concentration in one country or in one industry or with one obligor, but are looking for a diversified pool at all times. And then there is the pricing automation. Every single one of these instruments can be priced, and therefore we make sure that everything is also risk commensurate in here. Then there is the reconciliation which is needed, and the reason why the reconciliation is needed is because it will be very hard at this point if you want to go to any traditional banks, if you go to non-bank sellers, to get hundreds of thousands of instruments that are already on the blockchain. That will come, but there is no need necessarily to wait until that part happens. What we do is we're agnostic. If it's already on the chain, fantastic. If it's not on the chain, we can convert it as a pool and transform these off-chain assets in its entirety into a token. This is almost like if you take a house or you take an old-timer, vintage car or anything else, and you convert a real asset essentially into a tokenized asset. I'm a big believer, that this all has to be eventually on the chain end to end until you go to the buyers and suppliers and for the institutional and retail investors to be actually ready to purchase tokens of atomicity in the smart contract and therefore eliminate counterparty risk. That is a game changer. This is just simply not possible without the technology. So one starts first, and then I think the other will slowly evolve and gets accelerated as well. But in the meantime, we are ready to convert any form of off-chain. But again, if there are on-chain assets, then we'll obviously prefer those into on-chain tokens on a pooled basis. The primary marketplace on the top, that is really just for an originator to come to the investor community and say, I have assets and I would like to make those assets available. So that's what it is. It's not a secondary marketplace. And we're obviously all well aware of the developments there, particularly in the regulatory space. For security tokens, you need multilateral trading facilities in the UK, in Europe, and you need ATS infrastructures. And there is still a little bit something to be solved with regard to the central security depository and how this all works. But the good news is it's pretty much now decided on how it will look like and how the law essentially is going to be amended in the various jurisdictions. And the estimates would be somewhere around 12 to 24 months until this becomes a reality. And I think that will then also open the floodgate on the secondary side. Now, diving into the trader token. So the value chain obviously always starts with the corporates, and in particular, the underserved SMEs. There are about, if I'm not mistaken, about 400 million SMEs, probably that includes very small mom and pop shops. But it's also a fact that about 70% of global employment is coming from small and medium-sized enterprises. So this is really the backbone of our global economy. Whatever the industry is, the majority of employees work in small companies. It's unfortunate that today small companies often do struggle with access to affordable liquidity, particularly with regard to the trading of goods and services. And what then happens is that these companies will have to take expensive loans, which come with covenants. They also will have to use credit card overdrafts and other forms of financing, which are very, very expensive. And this is something we want to change, because someone who creates a widget, whether this is a small corporate or a large corporate, once you produced it, there is some tangible good, you ship it, and you should actually have a similar or fair access to funding. And it shouldn't really matter whether you are a large corporate or a small corporate per se. So how can it be done? Well, it's the fact that it's unfortunate that banks don't have more capacity, but banks have this operational infrastructure to do the origination. And now we're moving from the left box into the originator box. The originator, big leading banks, they actually provide a lot of value. You know, they before they even take the risk per se. So they, but they don't have all the capacity that would be required to open up the floodgates of liquidity to these SMEs. And what they do is they know their customers. They make a risk assessment. They are absolutely experts in that, and have a good track record and understanding on how to assess. They often also have different forms of business interactions, relationships, whether these are current accounts or other accounts they're providing to these customers. And then on top of that, they also see the trade flows. They can do payments, they can do collections, but they can also go and work out if someone doesn't pay very, very efficiently. They can manage credit insurance and many things on top of that. But the issue is that there is not enough liquidity on their balance sheet, and that really requires a distribution. And that's what Andre described. The whole trade finance distribution initiative is all about making that distribution happen and building this market infrastructure such that all sides are able to connect, interact, transact at very low cost, and that we really liquefy particularly trade finance. So the originator, in the case of the trader token, we are working with the first originator, but we have a lot of originators on the platform, from the leading commercial banks all the way to small non-bank originators. But here, the first one now we are working with is an originator called Accelerated Payments. It's an Irish company that is investing in or focusing on UK corporates, Irish corporates, Australian and US corporates only. So not emerging market or anything, but really good jurisdictions per se. Everything they originate, they also commit to hold the first 5% of the first loss. So any loss that appears in the pool, the first 5% the originator takes themselves. And then the rest is insured with a single A rated credit insurer. So that is their value proposition. And now XTC Tech is the repackaging entity for the trader token. So XTC Tech is buying that pool of assets, including the insurance and the first loss commitment, and is then creating or issuing the tokens on the other side. And the tokens are on the XTC network and are now available to institutional investors, but also retail investors in Europe. So retail investors are obviously have to go through a prospectus approval. That's unfortunately the cost of doing something in the regulated space. You can't just distribute it freely to anyone, but you need to distribute it in a certain form in certain jurisdictions. And what we have done is together with XTC Trade Tech, we have set up this Liechtenstein based XTC Tech AG, and then we have got full issuer approval and got a prospectus. That prospectus has then been approved as well, and then it had to be passported into all the European jurisdictions. And you will find, if you go onto the website of XTC Tech, you will find a whole section with all the documents, and you will see that many of them have been translated into different European languages, Italian and Spanish and French, etc., and then had to be approved explicitly again by those countries. So really an approval on a country by country basis. That means anyone in Italy, for example, any retail investor can now purchase a Trada token that is representing an insured pool of trade finance assets, as described before. And the fantastic thing here, and that I think is this for me, this 0 to 1 kind of effect is 0 you can't do it, 1 you can do it. Is you can take, even if you just want to invest $100 you can get access to such an asset class, and that was just not possible beforehand. So it's a real democratization of access to trade finance asset class, and it also obviously eliminates the counterparty risk because of the atomicity of the smart contracts. Yeah, with this, please have a look if you are interested. Have a look at the website. It's xtctech.io, and you will find in the download section you will find a lot of material, including risk assessment, etc. So it's all there, and I think with this, I'd probably best pause and see whether there are any questions.
Thank you, Christoph. That was really interesting speech, by the way, and thanks for mentioning Italy in your speech. You say, and it was, I guess, due on purpose because of the economic tissue here is basically made by micro, small, and medium enterprises. There is a question here I would love to start with. Then I also have my own one. There is this guy Nick is asking, what are the benefits of storing tokens in a blockchain compared to a centrally managed database? Would love to take the question. Is it you, Christoph?
Yeah, happy to start. Look, I think it's this atomicity of smart contracts, because what that does is it eliminates counterparty risk. Now, that's something we take for granted, and maybe I just explain quickly what it really concretely means. If I'm Andrea, you know, if I would give you promise you to give you 100, and you are selling me, I don't know, football or whatever, then you will put the football into the post, and I will maybe send you the $100 bill also by post. Now, if either one of us actually doesn't fulfill the pledge, then the other side is exposed. Then I might end up with no football and paid the 100, or you might have no more football and I have essentially no paid. So that is the great thing with the smart contracts and the atomicity they provide. And for in the institutional space, obviously there was always, for all the decades, there is a solution, but it's a very clunky, very expensive solution, which are these central security depositories, and only a very few large institutions really have access to those. So I don't have access directly to a central security depository. And if I want to eliminate my counterparty risk on small transactions, well, I need to go to a bank. They will need to open a custodian account for me. Then they will kind of like be plugged into a central security depository. Then they go through an exchange, and then the whole thing happens on the other side. And there's many other service providers in between, and everyone cuts. And here we're creating something which is real time, secure, and basically costs, I wouldn't say nothing, but hardly anything.
Christoph, there's just something that came to my mind when you were talking right now. We're talking about trade finance. We do know how traditional means for settling cross-border transactions are. Is this new kind of assets viable for finding new ways and new instruments, by the way, in managing this transaction settings up? Because nowadays, one of the main problems that traditional trade finance instruments, they are really cumbersome in managing, inaccessible to small and medium enterprise, and costly, of course. And I would reframe this, in my own opinion, into what's going on in the UK, and you know it much better than me. You see, with what's going on with the UK ICC, with the ICC UK Centre for Digital Trade, and the URDTT that is about to be introduced. So, just guessing how this travel token can fit into this new world that is being shaped up. Andre wanted to answer, by the way. Sorry for interrupting you, Andre. I didn't say this before.
So basically, what is happening on the origination for SME funding SMEs? Often those new platforms are focusing on approved payables financing. So they are financing payment commitments offered by the buyers, and they are financing the suppliers. So offering early working capital on the basis of transactions that have been fulfilled in a way because the buyer has agreed to pay on the due date, but between the approval of the invoice and the due date, there are a number of weeks or months that offer a financing opportunity for those non-bank originators. And this is where, as Christoph said, we're working with a first non-bank originator called Accelerated Payments, focusing on exactly this activity. Of course, the Trada token can also be used on other types of funding, like other trade finance instruments. But at this stage, the SMEs are often getting working capital on the basis of supply chain finance. So they're working with their buyers, usually larger buyers, to get those approvals, which trigger working capital facilities.
One more question, by the way, by the attendants from Abhishek Gupta. And sorry, but I lost my glasses now and seeing it very badly. Kindly confirm on its legality in various jurisdictions. Is it prohibited in any specific jurisdiction?
Yeah, I can take this one. So as it's the case with any security distribution, you will have to work jurisdiction by jurisdiction, and you need to get the regulatory approval from every relevant jurisdiction. Now in the EU, obviously that's all standardized, so you can passport from one country into another. It's not automatic. You will still need to send the documents. You know, if you have something in an EEA country like in Liechtenstein, you then still need to send it to Germany, and then Germany has a certain amount of days to either object or approve it. So that means concretely that if I'm a German retail investor and I don't know, have limited income, limited wealth, I can still buy, within reason, I can still buy this token. If for reverse inquiries for certain type of countries that are not sanctioned and are not exposed to the US, we can also take from certain type of investors, accredited investors, or experienced investors. We can also accept interest from actually most of the jurisdictions, but you would have to come on a reverse inquiry basis. I mean, I cannot go out and actively sell it. Yeah, so it's not specific to the token. It's actually just as the securities industry works. It's the same thing for an IBM share. You couldn't go and market and kind of a new IBM issuance or something. You couldn't go and market it freely without the necessary licenses for every single jurisdiction.
Perfect. Thanks, Christoph. Any other question from the attendants? I think it's a good moment for clarifying any doubts.
Yeah, the interesting thing is here with the tokens, we are not introducing the tokens to the corporates. The SMEs do not have no impact from the way we bringing liquidity into the system via tokens. So there are other initiatives that are looking at really introducing blockchain and digital assets for the purpose of it, and trying to change the whole chain, which is very impactful. And in many cases, the corporates, what they want is just liquidity, and they rely on those non-bank originators, or sometimes also on factoring companies or local banks to bring this liquidity. What happens behind the scene in the background, that means behind their financial counterparty, is none of their business, and not important to them. They just wanted the liquidity from their financial counterparty. In this case, could be accelerated payments in the countries that Christoph mentioned. But of course, there are a lot of those non-bank originators providing supply chain finance services to the mid-cap corporate market buyers and their SME suppliers. So we are not trying to introduce blockchain for the purpose of it. We are using blockchain, XDC network in particular here, and the beauty of the digital assets, the token, for extending the access to the trade asset class to those retail investors, because as Christoph said, you can start, at least in the countries that are supported today, you can start as from $100, basically, something that is not achievable in the traditional way of working, which would be buying an asset from a bank, as the banks do between themselves on MRPA, or issuing a note. You can't get access to that as a retail investor, and in any case, it would be far too complex and costly when someone wants to invest $100. We just refer to this $100 as a minimum. Of course, the purpose is for retail investors to invest much more.
Thanks, Andre. What do you see as next step, for this new digital asset classes? Also geographically, we usually focus on Europe and neighboring zones. Any other perspective for other continents, where also SMEs are the bulk of the productive area? What do you see as next step in this?
Yeah, so I think there's obviously three big markets out there, and these are the US, the UK, and the European Union. These are markets which have very strong views on regulation, and luckily most of the rest of the world can be mapped into some of those into those markets, at least on a reverse inquiry basis. But once you are established in those, then you pretty much you can do business with any. Obviously, the sanctioned countries would always be an issue, but with pretty much everyone else. So that's from a geographic perspective. In terms of the trader token, we wanted to prove here that this token can be done in the retail space. Obviously, you might know that we started last year with an NFT token, and we have done this with the XDC network, and also placed it to an institutional investor. We then repeated this for not just a static pool, but also for a revolving pool of trade finance instruments, and now we have actually built the whole infrastructure from a regulatory perspective, and really took it to the next level. The final frontier now is to now create exactly what we have, but bring it into a secondary liquidity space. Once we have achieved this, and obviously also catered for the complexity of the US market through potentially a Reg D issuance, initially for accredited investors, then I think there will be no more stopping, right? And this could really then become a very scalable proposition. Maybe if I can add also, why have we started to do this? We always felt that the traditional stablecoin proposition, in the way we know it today, obviously we all know in 2 years' time, stablecoins will be slightly differently treated, regulated, etc. For example, the MiCA rules in Europe will precisely state what a stablecoin has to be. And I think we're all clear that the existing stablecoins would not meet those criteria. So what we wanted to do is have something which can actually be very stable, which is represented by the real economy, which also is doing something good to the economy, to SMEs and channels liquidity to where it's needed most, but in a very safe way, and where investors can capture this illiquidity premium efficiently. And we believe that there's a lot of hype you can create with a lot of assets, with condominiums in Florida, etc. But you cannot create hype with real economy trade assets, because how much are people prepared to pay for an apple? It only as much as the underlying purchase power also allows, right? And that drives the financing then, and therefore it will never be disentangled to kind of like real world and the real economy.
Thank you, Chris. There is another question, by the way, and I'll let one to answer. Redemption, it comes from my friend Frank Wendt from Germany. Redemption of Trader tokens is in fiat currency or in crypto tokens?
Yeah, so it depends how you pay in. If you pay in fiat, then you will get back fiat. If you pay in USDC or USDT or whatever you want, then you will get back whatever you paid in. Plus, obviously, interest if everything goes well.
Thank you, Christoph. I was pretty curious, and here at BSCA, we're trying to go deeper into some of the issues that some of the arguments that Mr. Castellan was quoting in his introductory presentation, such as ESG and sustainability. Just wanted to ask you how to reframe this within the Trader token and trying to create these new asset classes. We're hearing a lot about ESG, carbon capturing, carbon offsetting. How do you see this within the Trader token in the future, and supply chain, of course?
Yeah, I have to start on this. Look, I think there is obviously a huge social impact element with regards to helping SMEs and supporting them and creating and channeling liquidity through to those. I think, frankly, on the environment angle, we haven't yet gotten a specific focus, and that's purely really because the rules are still fairly fuzzy. So we are not looking for particularly, environmentally unfriendly industries here at all. We are obviously looking at the more mainstream, not so much commodity focused, but mainstream SMEs. But it's still, I think that's just the reality. It's still fairly fuzzy to assess whether a company with 34 employees somewhere in the UK or Ireland is actually, and how you benchmark this, whether they are environmentally more or less friendly than another one. I think we will get there, but it's hard for us to get that data at this point. What I, however, can say is that we are looking also with the XCC network. We are looking at projects which are purely based on solar panels and similar type of opportunities, and that would be incredibly exciting, to get a next Trader token done, focusing on such a kind of dedicated industry.
That was next question, Chris, by the way, but I guess you already answered that one. So it is new frontier, let's say, and I share every word you say about ESG. It's still a work in progress. So nothing has been fixed so far. Nothing has been created in a very permanent way. So still ongoing journey on both sides. And by the way, I agree with you that with the industry going towards sea renewables, solar panels and other stuff, we should follow definitely that transition, especially in times of energy crisis, as we all know, especially in this country where I do live. This is gonna hurt and it's gonna impact massively small and medium enterprises besides family as well.
I mean, there is an immediate, maybe a repeat of what Christophe just said, but for Trada token investors, there is an immediate link to the S of ESG, because by investing your liquidity into Trada, you're investing liquidity into the trade finance space, the SME space, because we're definitely focusing on the SME space to deliver the expected yield. That's where it happens. But funding SMEs is an important has an immediate social impact. I mean, Christophe mentioned the importance of the SMEs in the economy and so on. And basically our vision over time with institutional investors and retail investors, and potentially, as Christophe just said, additional tokens that are more specifically targeting industries, is to close the trade finance gap, which is nearing 2 trillion at global level. So you have a direct link to the economy, focus on SMEs, and then it's all about in the future getting data on the level of ESG compliance, whatever that means indeed, of the SMEs that are being funded by originators. But the regulators are working on this. We're gonna get more and more visibility on ESG scoring. And it's all about getting trusted data from the SME space through the originators.
And that's where maybe DLTs and blockchain can play a major role in getting trusted data for the future, validated ones. So I would reframe also in the bigger picture SDG, Sustainable Development Goals, working in that specific space, just ESG being one aspect. And if you look at what the United Nations said about digitization in terms of filling in Sustainable Development Goals, that's the right direction. And I particularly like, Chris, what you said. You see, when you have these geographically and economically viable token that can be utilized in parts of the world, this is exactly what the world would need. I'm thinking of, you see, even in this country, it's surrounding country, but down below, I'm thinking of Africa, or so many initiatives, they simply do not make it through in their own living because of lack of liquidity. That's where the first world, let's put it so, can play a major role in capturing liquidity when it's most needed. And I would love to go deeper into this in the near future, by the way. So I leave it on to the attendants. Don't be shy, make questions. They have a unique opportunity to have Mr. Casterman and Christophe Treter today with us to make further questions. They were here to answer them. Eric, I call you on stage, by the way. If you have some doubts, don't hesitate to post questions on your end as well. I know it's a little off your traditional field of operations, but if you have any perspective into what we discussed. Can you hear me, by the way, Eric?
Oh, you're speaking to me? Yeah, absolutely. Hey, thanks, Andrea. No, always good, always great content. No, we as an industry, and in my world at least, the supply chain folks, right? We need to do things differently. Digitization is an effort that's been going on for a long time, and initiatives like this do absolutely help. Invoice factoring is a big thing in supply chain. Liquidity, floating warehouses. I can go on and on and on. Different ways of financing your inventories. Initiatives like this can be helpful. Look into it. Don't wait for it to be a popular thing. Look at innovation in your supply chain, and that will make you competitive. So again, thank you very much for the enlightenment, and hopefully we can move this industry forward.
There's one last question still from Frank Venter. I don't know who want to take this up. It's asking, do you target blended impact investors and development financial institutions for funding and first loss?
Not explicitly. So where we look at all kind of risk mitigation mechanism, and where we are looking at first loss, then usually the first loss will be taken by the originator. It doesn't have to be that way. But what we haven't done really to tranche up trade finance and then go deliberately and see, kind of go to a hedge fund or go to a development FI to get that first loss placed. So it's almost more like to find an alignment of interest with the originator.
Perfect. Thanks, Chris.
Now, some originators are kind of new entrants, as we say. It's not only banks or factoring companies; those are the new supply chain finance platforms. But what we see more and more is also the big players in the logistics industry. Those are operating the shipments, or IT companies in the shipment space that are looking at bringing funding to the SMEs they support from a transport shipment perspective. So trade finance is not a matter for banks anymore. It definitely, the large corporates still definitely continue to work with banks, because they do so many types of transactions with banks, payments, FX, securities, and so on. But when you look at SMEs and mid-caps, more and more, they're going to be able to get funding, working capital from non-bank entities that will be regulated financial institutions for sure, and that will seek liquidity from institutional capital market space, but also where Trada token can play a major role to bring retail liquidity into the SMEs via those new types of players. So I've been looking at some players in the transport space. I've mentioned a few examples in my latest blog of 10 days ago about the acquisition of Bolero by a big IT company, the acquisition of SDocs by ICE, and other interesting developments like on the logistics, transport, shipping side. So trade finance is expanding into various ecosystems, and whether the liquidity comes from capital markets or retail, as long as the liquidity gets to the end destination, the SMEs, it's what we target. So we are open indeed to work with a number of servicers of assets through the TFD initiative and the trade tech technology.
Thank you so much, Andre. So we just came on top of an hour, by the way, so I think it's time to close the meeting. And I thank you so much for being with us today, to Andre. Christophe, thanks a lot for connecting with us, for being with us today, by the way, even on the other side of the ocean. And thank you both so much for being so insightful. I can't wait to expand discussions furthermore in the future. I do invite you to join again us during next forthcoming meetings. I'd love to go deeper into space of trade tech, digitalization. So thanks, really, thank you so much for being so insightful today with us. And I hope to see you soon again.
And
thank you.
Thank
You're welcome,
you, Christophe.
Thank you, everyone.
Talk soon.
Bye.
Bye-bye.
Andre.
Talk soon. Bye.
Eric.